Hello. How have you guys been? And it's been long time, and I am back. Actually, I didn't plan to have a session today, but as it seems, the market is actually in red after a long streak of green days, and it's actually in red. So I just thought that I would have a short session with you guys, just in case some of you guys panic and panic because you have not seen rate for a long time. I think this has been since March 13, right? Since March 13. You have actually hardly saw any red weeks except 2 weeks in between somewhere in May. Other than that, it's all green days or green weeks. Okay, so how have you guys been? And I hope you guys have been okay because I was actually away for quite some time. I think at least 4 or 5 weeks, and it's actually really sell in May go away because I had some breaks for off trading actually, and have not been having much opportunity to trade and also to share with you guys. Yeah, of course, we still do catch up every week on our newsletter. And if you have actually been following up with our weekly newsletter, I think you guys should be okay. Yeah, and of course, yesterday itself was actually public holiday, right? There was actually no market, and we did also issue our newsletter. And what we actually mentioned yesterday was that the market seems to be too hyped out, and then you guys need to actually watch out a bit. As I said, that it just looked like a locomotive, a train without brakes, and you are actually riding on such a train, and you could imagine how you would actually feel if you ride a train and the train does not have any brakes, it doesn't stop. Yeah, okay. And of course, today you actually see that the train has actually started to slow down a bit, and of course this is somewhat expected, because the market cannot continue to actually go up every day, or every week or every month. It has to have some retracement, have to have some breather, and it's not to say that we are actually going down to a bear market, but of course the retracement for some days or some weeks might be actually possible before the market actually goes up higher. Yeah, so let's come to the let's share a bit on the chart. A long time I have not done this. So I've lost touch of the buttons. Okay, let's share the charts a bit. Yeah. So yeah, I hope you guys can actually hear me. I'm not sure if the internet here is actually good. I have actually changed with my location, streaming location. Streaming location I've actually moved up. If you can hear me well, just give me a thumbs up or a love so that I know that everything is actually okay. All right. So yep. So this is actually S&P, and where are we today? Is actually down by maybe about 30 points. SPX down about 30 points. Yep. And of course, even last Friday itself, you actually start to see that the market has actually starting to actually show signs of fatigue. Yeah. And last week, basically, what happened was CPI was actually announced. CPI was actually below expectation by just 0.1. Yeah. CPI was actually 4%, and of course, it is actually how to say, down from almost a year ago in July. The highest point was actually 9.1 if not mistaken, and of course we are actually at 4 right now. The target is actually to go down to 2. Yeah, so we are almost there, but of course I do not think that we would be able to actually go down so quick, because the lower it goes, right? I mean, the more sticky inflation is. Yeah. And of course, as you guys know, price of things doesn't come down so easy. Yeah. Once it actually goes up, it doesn't come down so easily, especially if you are already at the low, not the low inflation, at the 4% inflation is actually not that bad, I would say, as compared to 9% in the past. Yeah. Okay, all right. So yeah, so as I said last week, we have actually shown some signs of fatigue. Yeah, and of course, if you look at the daily charts, this is actually the daily. Wait, just a second. I need to plug in my battery. I forgot to plug in my battery. No battery. Okay. Like I said, I changed my location, so it's all new. Okay, all right, good. Okay, good. So where are we? Okay, so as I said last week, we have actually shown some signs of fatigue, and you can see last Friday itself, we were actually down by about 16 points. 16 points, and you could actually hardly see down days for many days before that. You could actually hardly see down days. Yeah, especially after CPI was lower than expected, and then come the Fed announcement the day after, right? The Fed announcement the day after on the interest rate. Basically, they have actually stayed put at 5.25%, right? And this is actually I would say a bullish sign for the market. But of course, the Fed chair has actually remained hawkish, yeah, because he did not commit to say that the rates would actually come down this year. Or they would actually start to cut rates. Instead, he did mention that there could be possibly two more hikes. Yeah, 2 more hikes. Despite the statement, right? Market still rallied. And of course, one of the things I think when we actually, I think we also spoken in the past, right? We also spoken in the past some of the signs of market tops, right? Market tops would be huge rallies, right? Huge rallies up, quick, big candles, big green long candles. Big green long candles would be possible of signs that market is already topish. Market is already topish. I think in our newsletter yesterday we did find one of the articles, one of the past shows which we mentioned how to actually look at change in market trend, you can actually go to the post, right? You can actually go to the post. I actually put it up here. This was the article, right? Yeah, you see the greed yesterday was 82. Extreme greed, yeah, and of course when extreme greed comes, right? I mean, what will happen? I mean, of course, you need to actually be a bit careful, yeah. Where was it? Yeah, I think this was the link. Yeah, this is actually the link. You can actually go in here to look at one of the past shows, yeah. One of the past shows, is this correct? Yeah, I think this was the one we did talk about. I think it's somewhere in the middle, right? We did talk about how to actually look at some of the signs of change in trend. Yeah, change in trend. You can actually go refer to this show if you want. Okay, coming back here. Okay, so yeah, so last Friday down, today I expect it to be down. In fact, we, how to say, not to say we shorted the market. Yeah, I mean, we expect the market to actually come down, but of course, somewhere at I think 4,300 points. Yeah, so I have some positions, some of the short calls position at 4,300 level. Of course, it breached above 4,300, and the positions are actually in the money right now. And of course, I hope that the market continue to come down a bit till month end, right? To actually have all my short positions going back out of money. Yeah. So okay, so what do we expect here? Okay, of course, there would be, we breached the 4,200 level, we breached the 4,300 level, yeah, and in fact, last week before Thursday, right, we breached the 4,400 level, and of course, it is actually coming down today, and we need to actually see if basically the trend would actually continue to come down. And of course, one of the support levels, would actually stay at somewhere around 4325, which is actually this high here. You need to actually watch this 4325 if it actually holds. Yeah, if it does not hold, right, then of course we could actually see the market to actually come down further to back to 4,200 levels. There are 4,200 levels. Yeah, and this is not to say it's bad. It's also good. So that you know, the market actually goes up in waves, right? Up, down, up, down, up, down, up. Yeah. So it's not a bad thing. Yeah, it's not a bad thing for it to actually come down. In fact, it gives us a little relief. And if you find support, then of course there would be also chances for you to actually get in more on long positions on good fundamentally strong stocks. Yeah. Of course, the main stocks which has actually carried the market are limited to a few, and of course those kind of stocks would possibly, I would say, may possibly have a limited upside. Yeah, potentially there are other stocks which could which could give much better opportunities than those which had rallied more than 100%. Yeah, if you can actually look at all these big boxes, right? These are the stocks which has actually rallied. This is the past 6 months, right? Rallied by more than 30%. Apple up 35%, Microsoft up 35%, Google up 34%, Meta up 138%, Amazon 41%, Tesla 66%, Nvidia 152%, Broadcom 55%, AMD 77%, 77%. Yeah. And of course, the sectors which has been lagging is the healthcare, and of course, healthcare was good last year, right? Healthcare was good last year. Tech was actually bad last year. This year, it is actually performing, and of course, the financial sectors. I mean, after the bank runs a couple of months back, right? I mean, this has actually somewhat recovered, yeah, on the banking side. So one of the stocks which I am actually looking at is Visa. Because if you look at Visa, right? Let's look at Visa. If you look at Visa, right, I mean, it's actually somewhat to me, it's actually trading in range, yeah, and of course the support level which I actually look at is roughly between 220 to 215 level, yeah, 220 to 215 level, yep. Okay. Let's move back. We were here. Yeah. So what else do we have here? Yeah, and of course, if you have been following me, lately I have actually also been trading a lot on the commodity side, mainly on oil and also on gold. Yeah, oil and gold. And of course, most of these positions which I have actually entered are more aggressive strategies. In either XOM or gold using strangles. So if you are familiar with strangles, then of course you know the risk which you are taking. If you are not familiar with strangles, then of course try to actually go on defined risks such as an iron condor or a spread, whether it is a bull put spread or a bear call spread. Yeah, but of course, because of the low IV implied volatility of some of these counters, right? The premium which you could actually get from spread is actually not that great. Yeah, not that great. Especially nowadays, even the gold IV, right, has actually been IV rank has actually been only a single digit. In fact, sometimes somehow it actually also goes to zero, even negative in some days. Yeah. So yeah, so that's why I mean, in order to actually get more premium, then we have to actually go on more aggressive strategies. But of course, the some of the strategies which we have actually shared also with you guys over our newsletter. Despite not having traders talk, we constantly share with you the trade ideas or the things which we are actually looking at through our newsletter. And the last trade which we have actually executed was on XOM. Yeah. Because if you look at the not XOM, XOP actually, sorry, XOP. XOM is Exxon Mobil, not mobile. Okay, so if you look at the XOM, let's see. Yeah, so this is actually SOP, right? And of course, what has happened in the past couple of weeks is that I think early June, the OPEC has actually announced that they will actually cut production, right? But of course, the market did not really react so much to it, only on the initial so-called initial day when they actually announced. I think they did it on Sunday, then probably on Sunday futures plus on Monday, we had actually 1 day of a slight increase in the XOP price, right? I think it was somewhere early June here. Yeah, I think it was here. Right? Somewhere around here. Yeah. So there was actually some slight increase over this period, right? And of course, at that time, I think we started to actually put on. Before that, we already put on some short put position, and then when they actually made the announcement, we actually or even before they made the announcement, we actually exited the short put, and then after it has actually gone up further, right? We have actually put in some short calls. So we start to actually break up our trades, sometimes not entering all at once, not entering all at once. That means if we actually do a neutral strategy, we because of the expected volatility in the price, we actually start to break up the trades. Although the intention is actually to go neutral, but we actually start to break up the trades to actually take opportunity on the big moves. For example, when it actually spike up, then we actually start to do a short call when it spike up, and when it actually comes down, then we actually start to put a short put. Short put. For example, today it's actually down by almost $5, right? Then we are actually lining up some positions to try to actually capture this down move. If not today, then of course tomorrow it might actually continue to come down. Then of course we can actually get to enter at a much lower position to actually get a bit more margin of safety. And the previous positions which we have is actually at 115. We are still in the position of 115, and of course when it spiked up somewhere, I think here, right, somewhere around here, we actually entered again one position at 140. We also shared that on our newsletter yesterday. So we have now this range between 115 to 140, one position, one strangle position, and of course the price can continue to go down. We are not bothered, right? Because we have one here and one here, and of course you can see also the support levels of roughly around 115, 116, 115, 116 support levels for the XOP. It can continue to go down. We have a bit more time. I think the expiry is coming to July, if I'm mistaken. All prices would not, I would say, for the time being, although the market of economy is how to say, I don't know, going into recession, not going into recession, not so sure. Of course, the thing which on this all, right, is that the prices is actually always can be controlled. Can be controlled via controlling of production. Controlling of production. If it goes too low, then basically they can cut production to increase price. They can actually cut production to increase price. If it goes too high, then they can also take other measures to increase production, to increase supply, to actually bring down the prices. So XOP is one. The other one, XLE, the premiums are not not so good. SLE premiums are not so good. So I am actually not trading SLE. Yeah. So today again, SLE has actually a big drop. Yeah. The other one which possibly could do an entry is also gold. Yeah, gold. In fact, prices has already slightly went up. Yeah, slightly went up. You can actually see that gold is actually now starting to trade at the lower end range of this level. Yeah, lower end range of this level. Of course, it could actually go down further, but you can see that it is actually now at 179, about 180, and of course, if it actually goes down, then it could actually easily move down to this level here. Let me just pick up the pen. Where's the pen? Here, right? Okay, brush. It could easily come down to about 174. Yeah, because you can actually see that there's within this 176, 174, there's actually a gap up here, right? So it could actually easily come down to this level. So if you are actually doing any positions on gold, right? Then of course the levels which you actually need to place your trade would be at 174 or below, yeah, or below. But the premium is actually not that great. So I am actually still waiting for the IV of gold to actually go up further. And in fact, today itself, if I actually look at the IV, right? Let me check the IV on my other computer. Okay, the IV for gold today has actually gone up slightly. Let me check. To 4. To only 4, yeah. And yeah, like I said, the IV rank, this is the IV rank. Yeah? The IV rank has actually gone up to 4. Before that, it was even worse. It was probably at 1, or at times I see negative IV rank. Yeah. So now it has actually gone down to 4, and of course, if the market continue to actually come down, then hopefully IV rank for gold continue to actually goes up, and if it goes up above 10, then possibly if it goes up above 10, and if gold price can continue to actually come down, right? Can continue to actually come down, then we can actually start to see to put in lower short put positions, or even a spread if the premium makes sense. Premium makes sense. That 168 is another level of support, which we can actually see for gold. Yeah. Okay, so gold trades, all trades are all good. SPY or SPX, we are waiting for more market retracements to come. My target is for it to actually go down below 430. Yeah. But of course, there are still a lot of crazy people who would want to buy the dip. Yeah, want to buy the dip. Yeah. And hopefully it goes down below, and then after that it goes up. It doesn't matter. We would actually take profits on our position first before it goes up. Yeah, then we can ride further rally to the upside. Yeah, of course, the expectation for the interest rate this year would be one more hike. That is the market expectation. Jay Powell and the Fed is saying that there will be 2 more hikes. Market is only buying 1. Yeah, only buying 1. And of course, we can watch that on the CME Fed Watch, where I think there is about 60% on a hike in the next round in July, if I'm mistaken, July, and then subsequent to that, it stays on on the same rate. That's the market consensus. But of course, these kind of things would actually continue to change over time. And the key things which we still monitor are things like CPI, and then some of the other economic data such as unemployment and this non-farm payroll, additions to the services sector payroll. So I think that's it. And who is this Facebook user who welcomed me back? Facebook user, welcome back! Yay! Okay, all right. I think like I said, be a bit careful on your positions. Of course, if you look at other stocks like say Microsoft, today is coming. Last 2 days, it has actually came down by almost $13 right now. $13 right now. And of course, like I said, some of these positions we have even exited much earlier. And of course, I think we have actually exited somewhere at 325, if not mistaken. So of course we missed some of the further upsides to this. And if you look at this chart, I think it's quite scary, right? It's quite scary, right? So these are again signs of top. Signs of top. You can see, so you can see that this was actually the highest in November 21. They have actually reached the highest at 349, 350, and then you can see that again a huge long candle as the last pushed up to actually trap the is a bull trap, not bull trap, trap the people who want to FOMO in, and of course it's actually now hitting resistance and actually coming back down. So of course, if it comes down, then maybe at 310 would be the level to see whether it actually finds support. 310. This Microsoft, I think there are a lot of others are also in similar patterns. Apple, you can also see that these are the tops, previous tops. You can see historically, sometimes before it even reached the previous tops, right? It comes down. Before it reached previous top, it comes down, and now it's actually at this level. Of course, if you have actually write this 30% right? This was the 30% increase, right? You have actually write this 30%, then of course I would say, I don't know, you can continue to do, but of course a lot of fund managers are going on holidays. Are going on holidays. Summer holidays have actually started. Summer holidays have actually started, and of course, if they have actually made a good run on some of these stocks, why risk it? Why risk it? They would better be enjoying their holidays by the sea, right? Enjoying their year-end profit sharing, and they don't need to actually work for the second half of the year, because they have actually already made good gains in the first half. If they are heavily in stocks, then of course the positions would at least be 40-50% intact. Intact, then of course it would be 40-50% in the minimal up or gains. But of course this year, of course we don't count on how much they have actually lost last year during the down cycle. And of course, if you have been holding on, to the stocks, and you have actually not sold out during this run here, then you would actually be coming back to square. Of course, there are many thinking about this. I mean, many how to say, some people don't just keep and wait for how to say, just keep the stocks and wait for it to go higher. Yes, higher, and don't sell out and then coming back, sell out and then coming back. They don't do that. It's okay, but of course, because of the volatility of the market in the current years, because of the volatility of the market in the current years, I mean, the thing is, it could be better for you to actually exit the position. This is my personal view. You can continue to hold, not a problem. You can actually exit when it is actually topish. It is actually topish. You can actually exit, and of course, if it actually comes back down, you get an opportunity to actually come in again. For example, if you have exited here, and if you see that it comes back to this weekly 50 moving average, you actually enter here. Although it actually gone down further, right? It gone down further. At least you have actually made less losses, right, from this point to this point. If you have actually held it, then you would have made more losses from here to here. So right now, you are actually entering here. You're actually coming down from here and not from the top. Then of course, if you continue to hold it, it's okay. It went back up, right? And of course, again, another opportunity when it actually came down. Then another opportunity when it actually comes back up. So possibility. I mean, there are no 100%. It can continue to actually go up. For sure, it can continue to go up and leave you behind. It's okay, because I mean, if not on this stock, other stocks will also have similar kind of opportunities. Netflix is a bit crazy up, right? Even on the down day today, is actually up 4 points. 4 points up on a red day, but of course it's far from its high of about 700, 680, 700. It's now at 435. Then what other stocks, interesting stocks are there? Visa, I spoke about. Baba. China stocks has been always difficult to trade. The rallies for China stocks is never so far not a bit difficult to actually sustain for a longer duration. Although the index like HSI has tried to actually go back up to 20,000 points, right? Today itself, you can see that it went down below 20,000 points again, despite the US making a visit to China, right, over the past weekend. Okay, JD is down. JD is down today by 295. I mean, we have Walmart 154. Google is actually down, but of course you can see that it starts to actually move sideways. It starts to actually move sideways here, a big push up here. Starts to actually move sideways to look for direction, whether down or further up. CrowdStrike is also starting to move sideways. We can actually see similar kind of patterns, waiting for direction, waiting for the next move. So we need to actually see in the next days, what is actually going to be the next move for the market, whether retrace, go up, or retrace goes down. The other one is CME. Okay, this CME is also one which we are watching CME. And of course, if there are actually opportunity for us for it to actually come back down to about 175, then of course we can have some positions, start to actually take in some positions if we can actually structure it below 170. Yeah, below 170, this support level here. If you can structure trades below 170, that's great. So we are waiting for further retracement for CME. Meta, we are not trading it. Sometimes you hate the stocks which make you lose money, right? You see, you hate the stocks which makes you lose money. So you see this stocks came down all the way here. You have lost a lot of money when it come down, right? So some of these stocks I don't want to trade anymore. Goldman Sachs not trading it. JPM, yeah, these are some of the stocks which you also see being published here, right? Yeah, getting into resistance. Yeah. CI possibly. Yeah. You can see it's actually going having support at this level. Yeah, you can see the trend. UNH again possibly to be able to long this position. Yeah, possibly. Yeah, maybe I could also look at this. Yeah, you can see one day it actually went down by quite a lot last week. Yeah, then of course you can see support starting to hold at this level of 460. Young China retraced, starting to move sideways. Starbucks also finding support at this level about 97, 98. Starbucks. McDonald's I would say possibly having resistance at about 300. Yeah, watch this. If it continues to actually, if it goes up further, having some resistance, then of course there is possibility to do short-term call spreads above. Yeah. Palante again. This level about $16. We have of course some long positions on this stock. Yeah, some long positions on this stock. It has actually gone up by quite a lot, as it seems now having some form of resistance at 16. Yeah, but of course if it continues to say that it is going into AI, right? It's going into AI, right? Of course, this can bounce back to 28, but I'm not so sure how the market looks at AI story anymore. Yeah, because the last one who had came into this AI thing was who? Adobe, right? Adobe, which had shot from 400 to 482. 400 to 482. Yeah. 400 to 482. In fact, I exited my positions at this 400 level. And of course, like I said, you can't get the best of everything, right? You can't get the best of everything. Yeah. So some you miss is okay. Some you miss is okay. So for this, we miss the so-called AI rally. It made announcement, I think, Friday, if not mistaken. Yeah, and of course, you start to see that it's having is coming down $12 today. Adobe, QQQ, yeah, this is again a very huge rally up. Yeah, Microsoft again. I think we talked about this video. Yeah. Microsoft. IWM, yep, it is here. We have an iron condor positions on IWM. In fact, IWM iron condors are actually a bit slow. Yeah, if as compared to SPX, I noticed that the decay in IWM iron condors are actually a bit slow. Yeah. What else? What's the time? 11:45. Okay, we have done for 45 minutes. So I'll just try to wrap up here. Any other stocks which is interesting? IWM. This I think SQ, not trading it. This is Thor Industries. Yeah, this is the one doing caravans. Yeah, people don't have money to rent a house, right? So people are starting to stay in caravans and park beside the road. Yeah, you can see caravan sales are actually quite high, quite good. I think this is after their earnings, it also shot up by quite a lot. Yeah, this is also the beverage company, right? Monster Beverage. If you need energy, drink Monster Juice. Okay, so you can see that it is actually now going sideways. And of course, if there are opportunities to enter, if it comes down to about between 52, 54, yeah, then possibly long positions on Monster Beverage. Okay. Yeah. So I mean, Alcoa. Yeah, this is again. I think they are making Alcoa is actually making its earnings this week or today. If not, UBS adjusted Alcoa price to 43. I think they're making announcement earnings somewhere this week, if I'm mistaken. Yeah. So again, this one possibly, if you find support at this level, yeah, possibly can go up. Utah, huge dip here. China not buying makeups. American Express have already gone up. Yeah. So that's about it. I think there are quite a number of stocks which are published. Yeah, waiting for the opportunity to buy it lower. There are also some which has actually came down, which I actually explained just now. Possibility to start to take long positions on some of these stocks. Yeah. But again, volatility is increasing. Yeah, you can actually see from the past trends that prices only goes in one direction. Now you can actually see prices goes in two directions on the same day. On the same day, let's say go to lower time frames, right? If you move to lower time frames, then you can actually start to see two-sided actions. Yeah. If you look today, it's actually come down, right? Yeah. Then it starts to actually move back up. Yeah. So same like last week itself, you can see the volatility, especially on the day when the Fed announced, right? You can actually see the market sold off, and then by the end of the day, it actually went back up to more or less its opening position. Yeah. So I think that's all I actually wanted to share, and of course I do hope that I can make time to continuously have the Traders Talk every Tuesday. If I can, then of course we get to actually meet and see each other. If I can't, then of course try to actually follow us on the newsletter, and of course on and off we do postings on the Substack notes, yeah. Substack notes. If you download this Substack app on your phone, right, there's this thing called Substack notes. Okay, Substack notes. Where's it? There's this thing called Substack notes. Where is the Substack notes? Yeah, notes here. Okay, so this is actually notes, and of course, if you go on notes, it's actually also something similar like Twitter or Facebook, yeah. But these are only for the channels which you actually subscribe. These are actually channels which you subscribe, and you would see less garbage here. You'll see less garbage here, and of course, only for those things which you subscribe. Less or no, practically no advertisements. No advertisements. You can see that we post quite regularly, not quite regularly. Sometimes on and off, we do make postings here. Where are my postings? I can't find my postings. Some of the postings I've made here. Yeah. I just subscribe to it. I mean, then of course, when I post, you see it. Yeah. So yeah, some nowadays less postings on Facebook. You see, but I've moved around to more relevant sites. More relevant sites. Okay. So this is Substack. So yeah, that's, I think it's getting late, almost 12. I think I also have to close off and start to do other work. Okay, so I will see you guys next time. Yeah, please subscribe to our. You're already subscribed, right? So how to say? Please share our newsletter. Share our newsletter to actually get more people on board our newsletter, which we have been doing for more than 2 years. More than 2 years. Yeah. And of course, if you give me more comments, more requests on what you actually want to see on the newsletter, what you actually want to learn, what problems you have in terms of trading, yeah, by all means, write to us, give us a note, and then we will actually respond to you guys. All right. So until next time, catch up with you. Have a safe trading week, and all the best. See you guys. Good night.